Why the disconnect? What was so, I guess, confusing about the statement and then the clarification need from Jay Powell during the press conference to say that, no, don't tilt this as dovish. We're actually pretty hawkish about this.
Well, I think essentially Powell really needed to thread the needle here. So if he even gave the notion that he was easing up on rate increases, then the markets would have had, a crazy, amazing day, moving higher and creating more of an inflation issue for him. So he essentially opened the door for the possibility of a lower rate increases in the future, maybe 50, 25s in the next couple of months, but also acknowledge that financial conditions are somewhat tighter, and while also raising the notion that higher rates are going to stay higher for longer. And absolutely, as the clip mentioned, no pause whatsoever for the markets to kind of even misinterpret what he's going to do. But I think once the dust actually settles, I think Powell will, acknowledging that the pace and the level of Fed increases that has been done so far this year, and hopefully that they are not on autopilot, essentially driving the economy, off a cliff, by stating that they're going to consider the considerable developments, that actually should be positive longer term for the markets. And that will actually mean that, potentially they're going from being data dependent to being maybe potentially forecast dependent. So that I think once the dust settles could actually be positive for the markets.
Linda, at the end of the day, I mean, you mentioned the idea that this could be the right course of action. Is it enough, and when would we be likely to see some of the real inflationary pressures start to ease off in the U.S. economy? Is it going to be the middle to end of next year? Is it going to be in 2024 and beyond? There is a policy lag, so how long will it take?
So the first set of the rate increases went into effect second quarter of this year. So given that, there's almost a 6-month lag between the first rate hike and once you actually see it in the economy, you're going to start feeling the effects of the third quarter and the current rate increases sometime in the first half of next year. So with energy prices essentially hopefully coming down or moderating and anniversarying tougher numbers into March, April of next year, plus the fact that wage growth is starting to moderate, and you are starting to see companies, essentially freeze, or as mentioned earlier in your newscast around Twitter, firing people. I think that in itself together, you are going to start seeing inflation march downwards. But again, going to 2% could be a little bit longer, maybe towards the end of next year. But certainly you're going to see the pace of that inflation start to fall and numbers start to moderate from here.